We are joined this morning by Mr. James Hunt, Global Head of Real Estate at Global Student Accommodation. Mr. Hunt leads the global real estate team and is responsible for the expansion of its real estate portfolio through the acquisition of development opportunities and investment properties. Mr. Hunt is a chartered surveyor with over 20 years experience of purpose-built student accommodation in the UK, Europe, Australia, and the USA. Mr. Hunt has delivered complex projects in investment strategy, acquisition, development, asset management, joint ventures, and university partnerships. Mr. Hunt joined a GSA in 2018, and prior to this role, worked for the Unite Group for 17 years. In that position, he held a variety of senior positions, including as a member of the management board and leading its annual development program, producing over 5,000 beds per year. So, Mr. Hunt, it's a pleasure to have you here this morning for SHURE Vancouver.
Good morning. Good to see you guys.
So we're here with Mike Port from the Scion Group, and we'll be Mike Port with the Scion Group will take the first question for you this morning, James.
James, there's been some pretty significant macro factors in today's global economy. There's been the recovery from COVID. There's war in Eastern Europe, rising inflation rates, and rising interest rates in a lot of the developed countries. From a big picture perspective, how would you describe the current moment in real estate, especially as it impacts student housing and university real estate?
When you play it back like that, there's some serious issues in the world, aren't there? So I guess there's 3 points here. When you think about inflation, you see real estate being that classic hedge against inflation. If you think about student accommodation, the ability to rebase your rents on an annual basis, is quite special compared to many other real estate asset classes where it may be time bound at 5-year leases or whatever it might be. So that is tremendously attractive given the current environment. I think if you're an investor in real estate, you then say around which aspect or which sector within real estate you want to invest into. And what we're seeing in the last few years, and we saw this through COVID and we're seeing it now, is a reallocation and a shaking of the tree in terms of some of the traditional sectors falling out of favour. And instead, what used to be deemed to be an alternative asset class, like a student, has really risen in popularity and fame due to the great fundamentals that exist. So you see that structural change where things like retail are less favourable, student with growing demand, semi-limited supply, the ability to have very high occupancy and recurring rental growth, more money's coming into that sector, and I think that will remain the case, especially through turbulent times. I guess the third point would be when if you're the investor into student, just thinking about the diversification. And for us, we saw this through COVID. We had some countries where legislation was introduced in favour of the tenant, which may impact demand or rental levels, i.e. some students would want cash back effectively because they couldn't occupy their accommodation. And then we saw other markets where actually, even if it was in-person teaching, there was no intervention by the government, students still paid the rent, occupation was very high. And so with a diversified portfolio, we found that balanced out the risk associated with anything in terms of governance changes or legislation changes. And then finally, we're now seeing those markets bounce back. So Australia would be an example where students can now access that country again, especially the prevalence of internationals, and rents and occupancy are both improving dramatically.
James, over the recent years, there has been a surge in student enrollments in Canada, Australia, and some of the East Asian countries. At GSA, when you look at this, what are the most important enrollment trends globally that you see as they impact your work in purpose-built student accommodation?
Okay, so I'd say there's some fundamental demographic points here at play, irrespective of the country or the continent that you're focused upon. So the underlying principle is how many people are there of university age that have demand in that country or place? You then scratch beneath the surface and understand the makeup of that demographic group. So if you think about international students, are they just internationals, or actually is it around the country of origin and the prevalence of that students in that country to want purpose built? and the ability to afford the product and the demand for it and so on. So, for example, you know that Chinese students will have a higher propensity to book purpose-built accommodation than certain other countries. And so understanding that it's not just internationals, but it's then that granularity, that's really important for us when we look at demand and so on. We then have participation levels. So if you think about domestic students, how many choose to go to university, and that links back to the overall number of people of university age. We then think about the underlying qualities of the higher education providers. And the classic thing we're interested in there is the relationship between applications for a place at that university versus the number of acceptances. And if there's a over-indexing of applications, then that demonstrates there's pent-up demand and that university can grow if they so desire. And so we're trying to understand that in advance, given how long projects can take to get to fruition, and focus upon those university locations where there's growing demand, and basically supply will keep pace with that, because that creates some very interesting operational dynamics.
Michael, take the next question.
Yeah, the GSA is around the world. So if you could tell us a little bit about what your acquisition or development plans are over the next 1 to 2 years in North America, Europe, or East Asia.
Great. So there's a combination of things at play here. So first of all, we're well versed in going into a new territory and building scale quickly. So if I took the USA as an example, at the start of 2020, we were not in the USA. We had zero presence. Despite the challenges of launching a new venture during COVID, by December 2020, we bought an operating business and we had our first 8,000 beds. If we fast forward to today, we now have a long-term joint venture with Morgan Stanley. We've got around 2.5 billion of AUM and around 20,000 beds in terms of assets. And that's the tip of the iceberg. You know, we see doubling of that venture in the next 2-3 years. So that's in a marketplace where there's obviously massive demand and there's quite a lot of supply, and hence the opportunity exists to be an investor and a consolidator. If we look at, say, Japan, where there isn't really the product, you've got to be a pioneer. And so in Tokyo, we have 2 developments, or two operational schemes that we developed ourselves. We had to innovate in terms of product type, because the barriers to entry in that market are massive. They're off the scale because of the price of land, the availability, and the cost of building. And we had to really use our expertise in terms of how we package up developments to create efficiencies and actually make schemes viable. The attraction of that, though, is, take Tokyo as the example still, in a city of 1 million students, if we can prove the concept, and that's what we're in the process of doing now, the opportunities are endless. So coming back to America, I think it's more of a consolidation play and buying existing assets. Somewhere like Japan and other areas in Asia, it will be more of the development play because the product doesn't exist. And then Europe will be in between, depending upon the country you're in. So the UK is more like the US. You know, it's an established sector, been around for 30 years. Mainland Europe, it's more in its infancy. So there are some assets, but it's more about the development phase. Really what we want to do, though, is be that global consolidator and build the ultimate global portfolio in terms of quality based in capital cities and the major education centres around the globe.
There has been challenges in recent years, from the pandemic to inflation to rising interest rates. So with a combination of these collective challenges, how have you positioned, how has the business positioned itself as an innovator during this period of time?
In many ways, but if I come back to an example in terms of the ground up approach, we know the challenges around viability never go away. We know the challenges around affordability, for example. What we seek to do is, based upon the specifics of the marketplace and demand and the nuances, is create the right product for that market, but then we can have the ability to transport that knowledge elsewhere if appropriate. So the example I'll give you is, again, it's back to Tokyo. Very constrained market. there we've developed a concept of 6 people living in an apartment that is only 360 square feet in area. Well, if you talk that to North America, I don't think the concept will work. People will be used to probably double that amount of space per person, let alone for 6 people. But the point is, when we think about the challenges of going into those higher barrier markets, the more metropolitan areas of North America, for example, the ability to innovate with the type of product to get those efficiencies and create a viable product that meets investor returns, but equally is affordable to students, that's where we use our knowledge and experience from many years and many different areas to be greater than the sum of the parts. And so in turbulent times that we're currently experiencing, the innovative solutions become ever more relevant.
Mike, next question.
Yeah. James, we're wondering, we know about the partnership with Morgan Stanley, or if you're also seeking out any other unique debt or JV equity partnerships, and also the public-private partnership with development on campus is a big thing in the US and Canada. Is that something that GSA would be considering in either of those countries?
So if I take the first strand, what we've really seen over the last 20, 30 years in the sector is the evolution in the type of capital that's come in. So clearly, when the risk is higher, it will be that shorter term opportunistic capital that needs to see a higher return for the risk profile of the project. What we're now seeing with student housing being truly established as an asset class in its own right is a shift to long-term global capital that wants to write big checks, it doesn't want to get involved for small deals. And where it understands the marketplace, it will want exposure to many different countries. So really what we're seeking to do is have relationships with that type of capital that will follow us around the globe, create that premium portfolio that I mentioned earlier, and really we'll do that at scale. And I think the world of the future will not be about who's in the top 10 at country level, but who's in the top 10 at global level. And that will be the same for capital as it will be for the specialist providers or operators or whatever. With reference to the public-private partnerships, that's not a world we currently are in terms of on campus, but I do see that happening over time, and we're well versed in that, and we do understand the model and the similarities, but equally the differences versus off campus. What we do have, though, is long-term relationships with universities. We understand how they work, what they want from their partners, albeit that's in an off-campus world. So, we've got projects which are leased to universities for 10, 15, 20 years. What that creates, though, is something quite interesting in terms of the financial model, because clearly the cap rate will be lower given the risk profile of that type of agreement versus necessarily direct let. What that can then mean is the ability to offer the rents at a lower level because the cap rate compensates for that. And when we think about affordability and the spread of product and price point, that's a positive. So that's definitely a world we'll continue to embrace. And I think we'll be both an on and off campus provider in due course.
How do you anticipate property technology innovations from both the landlord and tenant perspectives? When we talk about property technology, we refer to the technology that's improving the operator and landlord experience, or subsequently improving the tenant experience in all-in-one applications. How do you expect property technology will cause further evolution in the real estate industry at large, and specifically at GSA?
So there's a few different strands to this, but data can only be a benefit both to the actual people that reside in these properties, but also owners and operators. So if you think from a student perspective, we create some brilliant facilities as an industry nowadays, but does that always meet the requirements of the consumer? Most times, yes, but there may be instances where it doesn't. Well, understanding usage patterns through data and being able to track the route a student takes around a building, or which rooms they go into in terms of common amenity and so on, and then reflecting that in the design, that's something that's becoming increasingly prevalent. So frankly, avoiding operators wasting money on facilities that won't get used. Because it's very easy to throw specification at a project to support the rental, but what you really need to do is understand consumer demand and what students actually value. So we've definitely seen how that data has influenced how we go about designing buildings, and I think that will continue. The other point I'd make is, if you think about sort of global trends, if you think about how many devices we'll have that are connected to the internet, that need to draw power, whatever, and then the world of the future where we'll be in 10, 15, 20 years' time, thinking about that in advance and changing the approach is going to be very important. And that will then create some challenges. So if you think about ESG and energy consumption, there's a lot that people are doing to offset that, to change usage patterns to improve efficiency, but equally the demands that will be placed upon buildings will increase. So there'll be always a bit of friction between those things, but as a general point of view, data, systems, technology, they can only benefit everyone. The important thing is, though, what someone does with that data rather than just creating data for the sake of it through whatever systems or proprietary information people have.
Mike?
James, one question I had for you is, especially considering the kind of markets that you're in, something we've seen worldwide is that the number of Chinese students going to other countries to study has gone down as the Chinese higher education system has grown. In a lot of countries, that's been replaced and picked up by students from India and from some other countries that tend to have less disposable income available and makes affordability much tighter, which is something I appreciate you've mentioned a few times. Student affordability is a key element in all of this. In the other countries, have you started to see, or has GSA made any noticed efforts around adjusting some of the product types, or adjusting occupancy levels, or maybe changing densities to account for some of the changing dynamics in the international student populations?
So yes and no. So firstly, in our portfolio, we've not seen that drop off in Chinese students in particular. But that may be a function of our investment strategy, our approach to understanding which markets to be in versus which markets not to be in. And if you're in the best education centres with the best quality education on offer, I don't think those will fall out of favour despite the initiatives in China to create, worldwide class institutions of education. Having said that, what is very important to us is to create a range of product types and price points so that we've got something for everyone. And if you think about a conversation a student may have with a property manager or sales manager or whoever, they may love the product, they may love the operator and the all-inclusive rents or the security or the common room or the study area or whatever the proposition is, but they may not be able to afford it. But if you've got something similar but may just be in a half mile down the road, or it's in an older asset or whatever, so it's essentially the same experience, but it may not have quite as modern a look and feel, then you offer that at a different price point and you can still capture that student who will be very happy there, be very satisfied, and they'll still see its value for money. So for us, it's about more than just a one-size-fits-all approach of a new shiny building built last year with the highest price point, because clearly that's a finite marketplace. So back to your point, we're not really adopting the model down to risks around country of origin of particular international students. Instead, we're trying to optimise our offering overall so that we can be appealing to a broad range of people, not just that top slice that will pay the highest rents.
James, one thing I wanted to mention, and Brian, you can edit this in or out. I really appreciate what you just said about the diversity of things, because there are a lot of similarities in what I've read about how GSA has grown in other countries, and now that it's just getting into the States, that line up very much with a lot of Scion's, how they've grown. And if you follow Scion, like you probably know, they've got 4 distinct brands. And they're specifically set up for exactly those reasons, to try to give students the same great experience, but at different price points and different amenities and things like that. And it is like banging one's head against a brick wall in a country where the purpose-built market is much more in a developmental stage to help people realize not everybody can have a luxury building because there aren't enough students that can afford a luxury building. And if you all end up half empty in 5 years, none of you are going to be very happy. So I very much appreciate that, and feel free to spread that philosophy around.
Well, indeed, and hey, we're a commercial organisation, so clearly we have a duty to our investors to give them good returns, and of course. But equally, we always appreciate the fact there are people living and breathing, residing in our communities, and they typically don't necessarily have jobs, so affordability is an issue. But the point on branding is an interesting one. If you think about how the sector will grow and evolve, the concept of students wishing to live in a branded community that has a defined offering, that's something that we think would be increasingly prevalent. So if you think about it in a hotel sense, you'd be in one city or country or wherever, you may favour a particular hotel chain because you know what you get and you like living there, and there's a loyalty program and there's a known offering. We're definitely seeing that emerge in the student world, and we've got relationships with some universities who are in different countries, and then they wish to partner with us. New York University would be an example with us in Spain and elsewhere, because they know what they're getting. And then we get some quite interesting things around exchange programs where students can go off and live within the same with the same provider, but in a different country for a few weeks of the summer. And so that cross-fertilization and the ability to let someone see the world, as it were, that's really interesting. And I think that's what comes around from being a global but also a branded provider.
James Hunt is Global Head of Real Estate, Global Student Accommodation, joining us for SHURE Vancouver. James, we appreciate your time and your insight this morning. Again, thank you for joining us.
Thank you, and good day.